Hello, everyone, and welcome to EarnPark's biggest update of the year so far. I'm Vera, your community lead, and today I'm joined by Christina, our head of business development. In this session, we are bringing you the full picture, how we've grown in the first half of 2025, what's driving that growth, and how the Park token is becoming the backbone of our ecosystem. We'll talk about business results, product updates, community milestones, and what's ahead, including the Tier 3 token sale this September. There's a lot to share, so let's jump in. Christina, over to you.
Hi everyone, and welcome to our mid-year update. I'm excited to walk you through where we are today and where we're headed next. In this session, we're going to take you through how EarnPark has performed in the first half of 2025 and what's coming next, and how the Park token plays a key role in our ecosystem. Here's what we'll be covering today. We'll start with a snapshot of our first half year performance, looking at user growth, investor numbers, and TVL trends. Then we'll move to our updated product roadmap, followed by a closer look at the Park token, its utility and value it brings to our ecosystem. And after that, we'll share the results from Tier 1 and 2 of the token sale and wrap up with the details on the Tier 3, what's coming, and how you can take part. This is the most comprehensive update we've done so far, covering product, financials, and our token strategy. Let's start with the growth in our user base and investors. Over the past year, the number of registered users grew 3.5 times, from 6.5 thousand in July 2024 to 23,000 in July 2025. That's a year-over-year comparison, meaning we're looking at the same point in time last year versus today. On the investor side, the number of unique wallets that made deposits doubled, going from around 700 to more than 1,500. This tells us two things. First, more people are joining EarnPark, and second, a highest share of them are becoming active investors. That reflects growing trust in the product and stronger conversion from sign-ups to deposits. And notably, this growth has been organic. We've reached it without heavy customer acquisition spending. Now let's see how that translates into assets under management. Let's look at our total value locked, or TVL. That's the total amount of assets held across all strategies on our platform. In July 2024, TVL was around $9 million. It climbed to a peak of $20 million in March 2025, before adjusting to $15 million by July. That's a 25% drop from the peak, but still 65% higher than July previous year. The pullback came from the two main factors. The first, asset prices. Since TVL is measured in USD, declines in Bitcoin or Ethereum prices reduce the USD figure, even if the crypto amount stays the same. And the second, that's short-term outflows. Some investors took profits or reallocated funds after March. Overall, our liquidity base is strong and long-term investor commitment remains intact. And here's a quick snapshot of where we stand as of July 2025. We now have 23,000 registered users and 1,500 active investors. The average deposit per investor is around $10,000, which shows a serious commitment level. On average, our average investment time is 10 months. That's almost a full year, and we see its growth as time goes by. This is an important retention metric because it tells us that the users aren't just testing the platform, they're staying and investing in the long term. Now that we have covered the headline growth numbers, let's zoom in on what's actually driving returns for our investors.
Thanks, Christina. When we look at long-term results, the data is clear. Strategies that follow trends have consistently delivered. Algotrend Bitcoin has been profitable for 7 years in a row, even during bear markets. For example, it gained 159% in 2018, 62% in 2019, and 14.8% in 2024. By the end of this year, we may upgrade it, similar to what we did with the USDT strategy, by diversifying it across several non-correlated strategies to reduce volatility while maintaining returns. Algotrend USDT, which is a composite algorithmic trend and following strategy, shows similarly strong results. Its annual performance has ranged from over 100% in earlier years to double-digit gains more recently, including 23.8% yield in 2023. What's important is that these results come despite occasional short-term losses, which are part of the statistical trend following approach. Over time, the big winning periods outweigh the losing ones. Most other strategies, like market making, DeFi, or liquidity providing, they have more stable but generally lower returns. The right choice of the strategy depends on your individual goals and risk tolerance. Higher risk strategies can offer greater upside, while lower risk options focus on stability and capital preservation.
First half of 2025, yield payouts from non-algo strategies were 3.8 times higher than in the same period last year. This growth is consistent across all months. You can see there's steady accumulation without any collapses or sharp drops. What's important here is that yield came from mixed strategy portfolios without including algo trend. That means that even our lower and medium risk strategies have been generating strong, reliable returns for investors. So let's have a look if we include the algo strategy. So when we include our algo strategies, you can clearly see the month-to-month fluctuations. This is why algo trend isn't designed for short-term expectations. For example, in May and June 2025, the strategy saw drawdowns, but July delivered a strong rebound. This is typical for trend following. It performs best when clear market trends emerge, but it can lose during sideways periods. These patterns are intentional and part of the strategy design. Around 70% of trades result in losses, but the remaining 30% of profitable trades cover losses incurred during sideways movements and bring additional profit. The key message for investors is simple. Algo trend is a long-term game and short-term dips are expected along the way. So let's have a look on the strategy mix. For investors with deposits about $5,000, the average portfolio includes around 4.5 different strategies. That means most clients don't put all their capital into a single approach. They're diversifying. On average, the split looks like this: 25% in high-risk strategies such as algo trend, 45% in medium risk, and 30% in low-risk strategies. So based on the 2024 strategies performance, such a mix would have delivered an on average APY from 10 to 12%. Whether this is a good or bad ratio depends on a particular investor's risk appetite. That's why one of our priorities is to create tools that make it easier to build and manage a well-balanced portfolio that matches each client's goals and preferences. Of course, strong strategies mean little without a strong community around them.
Let's talk about how our community has been growing and the role the Park Lounge plays in making that growth sustainable. Park Lounge, our points-based engagement program, has become a centerpiece of community activity. Users complete tasks from connecting on social media, referring friends to making deposits and unlocking achievements, and they earn Park points. These points determine each user's share of our ongoing $1 million airdrop in Park tokens, and that's 5% of the total Park supply. Prices for it will be distributed in the fourth quarter of 2025, right after the listing. This structure rewards consistent, meaningful engagement rather than quick wins, and in numbers, the Park Lounge has already attracted over 10,000 active participants. We've also been running community campaigns on TaskOn. Thousands of users have taken part, completing quests and discovering EarnPark through interactive challenges. These campaigns not only bring in new members, but also they keep our existing community engaged. Our Discord community also continues to grow, now with almost 27,000 members, supported by active moderation, bot removal, and monthly contests to keep things vibrant. And our social media growth has been impressive. Our Twitter account grew from 15,600 to over 36,000 followers, and that's about 20,000 new followers in 6 months. Our Telegram, which is our channel and chat, grew from 1,500 to almost 7,900 members, and that's more than 6,000 new members. On YouTube, we grew from just under 3,000 to over 7,100 subscribers, and that's a gain of over 4,000 new followers. And all these numbers, they reflect not just growth, but a highly engaged and motivated community. The Park Lounge and airdrop mechanics are a direct way we are turning activity into real value by rewarding early believers and active contributors. Of course, the numbers still only part of the story. The real proof here is in what our users say. Our current Trustpilot rating stands at 4.4 out of 5, with 59 reviews from the first half of 2025. The feedback consistently highlights not just the platform's performance, but also our responsiveness and the quality of our support. For us, these aren't just nice words, they're confirmation that everything we do is translating into real user satisfaction. Now, let's walk through the bigger picture for where we're headed next. Looking forward, we've set three priorities that will define how we build and scale in the coming months. First, transparency and security. We've enhanced portfolio yield analysis, giving clients a clear breakdown of where returns come from. We're also prioritizing proof of funds and independent audits, so trust is backed by verifiable data. And second, high yields. We'll introduce more DeFi strategies, we'll refine our current yield mechanisms, and scale Park token based boosters. Our token mining feature we launched recently is just the beginning of it. And third, flexibility. That means expanding cross chain capabilities and integrating AI powered investment assistance to help our clients make smarter and faster decisions.
Collected feedback from more than 800 users, and it directly shaped how we have refined our roadmap. Some features have been rescheduled to allow more time for testing and integration, while others have been accelerated based on the demand. The core focus now is clear: expanding token utility, delivering seamless mobile app experiences, and giving clients faster access to high return strategies. This is about making sure all rollouts have the highest possible impact for the users. And to execute the roadmap in this updated form, we need to complete the upcoming token sale planned for this fall. Our updated roadmap brings in multiple products and features expansions, from algorithmic strategy updates to a dedicated impermanent loss mitigation protocol, proof of reserves, and AI powered investment assistance. We are also adding more ways to interact with Park Token, including staking upgrades, APY boosts, and discounts on platform fees. On top of that, strategy tracking and analytics are getting a major upgrade, giving investors a clear, real time view of the performance and risk. This is all about making our ecosystem more transparent, more rewarding, and more accessible. And while transparency and features are essential, so is giving investors the tools to track and manage their portfolios effectively. That's where our new portfolio analysis comes in. Now you can see how your total balance changes day by day, understand exactly how your funds are split across assets and strategies, and get a clear view on how your portfolio is evolving over the time. It's a simple way to get deeper insights without digging through multiple pages. Everything you need is now in one place.
And that ties directly into how Park Token creates even more value for investors. Park Token mining is now live across all strategies, adding extra Park rewards on top of your base yield. Building a company and product takes resources. We raise them in two ways: through public fundraising, with part of the allocation reserved for the token sale, and through marginal revenue from liquidity via our operational and investment activities. Early liquidity from our partners is especially valuable as reaching a certain TVL threshold moves us to break-even point. That's why we launched token mining, a way to reward users for providing liquidity. The earlier a partner joins, the longer they keep it in the strategies, and the more they risk they take, the greater the reward in Park tokens for them. With the token mining, users can now earn extra Park by simply providing liquidity on EarnPark and boost their APY along the way. We'll be testing and adjusting token mining parameters over time. We've done the first revision already as we fine tune the system. Every deposit works for both your capital growth and token rewards, and it combines yield, utility, and long term alignment.
And speaking of utility, let's look at what's next for Park in terms of staking, APY boosts, and fee reductions. First version of staking, launching in October, will allow users to boost APY by staking in Park. The longer the lock, the higher the stake, the bigger the profits. It will also unlock premium high return strategies and introduce solo staking for earning rewards without investing in strategies. APY Boost version 1, launching in December, will let users earn an extra 1 to 2% APY by receiving payouts in Park, followed by platform fee savings up to 30% in the first quarter of 2026.
And before we get there, let's recap what's already happened in the token sales so far. Since May, we've completed three token sale rounds: Seed, Tier 1, and Tier 2, raising over $800,000 in total. Tier 1 was a real milestone for us. It sold out in under 1 minute, And that not only exceeded our expectations, but also confirmed strong demand for the token among our community. Another highlight is that industry leaders have shown interest as well. For example, the co-founder of OneInch joined in during the seed round, which gave us additional visibility and credibility. Looking ahead, we have a limited offer for Seed 2 round, which is aimed at strategic participants who want to secure their allocation before the next public phase. And now we're getting ready for the next big step, Tier 3, which is launching on September 24. This time, as the first tier, we'll run the sale directly on the EarnPark platform with no middleman. And this gives us full control over the process and a smoother experience for our participants. Depending on market conditions, we still have the option to involve launchpads in a bullish environment, but our main focus now is our own platform and preparing for the TGE and listing in the fourth quarter of this year. And that brings us to the next big date on the calendar, which is September 24. And this will be the round which will give participants a smoother and faster experience without any intermediaries. The waitlist is already open, and joining now ensures you're among the first to get access when the sale goes live. So this is your chance to secure allocation before the final phases of the sale and to be part of scaling EarnPark's yield infrastructure for the long term. So don't wait, join the waitlist today and secure your spot in Tier 3. So this is all just the midpoint of 2025, and we're already seeing momentum that sets us up for an even stronger second half. The waitlist is already opened, and if you haven't joined yet, now is the time. Secure your spot, be part of the next phase, and take full advantage of the utilities as they roll out. So thank you everyone for joining us today, for watching this video, and we look forward to building the next chapter of EarnPark together with you.
Thank you everyone for joining. And remember, if you have any questions, you can write us in any channel you want. It can be on our platform, drop us an email, or here in the comments.
Thank you, Christina. Thank you, everyone. Have a good day and bye-bye.
Bye-bye.